So this week we find Redfin exaggerating the real estate market correction for investors while documenting record demand for home buyers. How can they reconcile both of them, and why would they exaggerate that? Well, as I say regularly, real estate news is not done by journalists for the sake of bringing you truth. They all have a reason why. And there's a saying in high tech that if you're not paying for the product, you are the product. And in Redfin's case, I think you are the product if you read their news. Before we get into that, though, this is my weekly real estate update. I'm Bill Gross, a real estate broker in Los Angeles, California. And let's take a look at the data as our starting point, and then we'll analyze a couple parts of the news, including Redfin. So as we look at the news in this week's real estate, we always start with 2 points of data. Number one, mortgage rates, which we find today still between the 6 and 7% bandwidth that we've been in basically all year long. We are a little above 7. We seem to be crashing to the bottom of 6, but we're in that same spot, about 6.6, ending this week. So we stay in that bandwidth. The second piece of data that we track every single week is inventory. The mortgage rates determine the buyer's demand, and the sellers are reflected on the inventory. We'll see where those numbers are. And as the trend has been for the longest time, inventory is below all periods other than during the pandemic, and are basically the same as the pandemic levels 2 years ago, and quickly approaching the bottoms of last year, the all-time record. So we have incredibly low inventory. We cannot have a real estate correction with low inventory. The only way housing prices drop is if there's too many houses and then buyers buy some and other sellers have to cut the price to get demand. As long as inventory is low, there cannot be a real estate crash. One of the great sites I find for analyzing the overall market is Altos Research. And Altos does a monthly or a weekly update on what they call the market action number, and they actually ticked up a little bit to 43%, 43, have been around 41. And what they do is they take a number of factors into account. The median list price has gone up. The number of new listings has stayed flat. The dollar per square foot has continued to rise. Average days of market has declined. So in Los Angeles area, if anything, the real estate market has continued to tighten slightly as a seller's market. Not like it was 2-3 years ago, but still very, very tight, not enough inventory, and certainly not enough inventory to have a market crash. So over the last few months, if you follow me regularly, I take to task the state of California and our terrible government policies that don't help our home affordability problem. In California, the obvious problem is not enough houses, and all these gimmicks get more headlines than actual homeowners. Well, the federal government jumped in recently with their own, I think, gimmick to try to get headlines that won't sell houses. The Biden administration is raising the cost of homeowners with good credit to help riskier borrowers. So basically what's happening is homeowners who have credit scores over 720 are going to pay about $40 a month extra on a mortgage compared to those with below 680 are going to get a little bit of a boost. Well, think about that for a second. How is that possibly going to help more people buy houses? It might hurt people with good credit a little bit, and help people with bad credit a little bit, but it doesn't create another house. The problem is lack of inventory. The problem is lack of houses. If we don't build more houses, we can't keep the prices down. We can't get more people in the houses. And these gimmicks with loans, politicians love them because voters are dumb enough to watch those headlines and vote for them. But the reality is it does nothing to help our housing inventory. So let's talk about, though, I think the real culprit in bad news this week, the award I have goes to Redfin. Now, Redfin, again, if you're not paying Redfin, which nobody really pays them, you're really just reading their material. You're either being advertised to, they want you to click, or they want you to use them to buy. So here's an article they don't really publish to their buyers, but they put out in the marketplace. Investors lost money on 14% of homes they sold in March, nearly the highest share since 2016. So let's break this down a little bit. What could be misleading about this? Well, one factor is, think about the numbers. Home investors lost 14% of the time, which means they gained or broke even 86% of the time. That's telling you that an investor If they're selling 7 houses, they lose money on 1, make money on 6. Is that a good business? It sounds to me like a pretty good business. I would imagine if you sell shoes, some shoes you make money, some you lose. I imagine if you sell, I don't know, dishware, some sell, some don't. And when you break the data down here, you see that's the case here. For example, median capital gain. This is the average profit per house investors in this terrible market. $146,000, which is about the highest ever pre-pandemic. So it was a little higher during the pandemic, but before that period, this would be a record, an all-time record, $146,000 profit. Look at the profit margin. It's only 45.9%. Now think about that. How many businesses have a 45% profit margin? And again, if you go back to pre-pandemic, that's about been the norm. And the reason why the margins can only go so high is it brings in more competition. It's too good of a market. You're going to have more competition, obviously. So to me, that looks like a pretty good market. I don't know why it's so bad. In fact, oops, not only do I agree it's a pretty good market, so could it be Redfin? Just 2 weeks ago, they said early stage home buying demand is the highest level since May. And you go into detail and see it's really some of the highest demand on record. People want to buy houses. So what are investors doing? They're buying the limited number of houses and renting to people who can't buy. Well, obviously it's a good business. I'm not saying it's the best ever or the time to get started in it. You should learn. I work with investors. You need to know what you're doing in the home flipping business. All I'm saying is it's really not bad news. It's not a bad market for home investors compared to what other businesses. What business are business people making a fortune in? I mean, retailers are getting, attacked with crime and shoplifting, and every business is competitive. But this one, 45% margins, average profit, $146,000. And let me say, it's actually better than that. If you look at the worst cities, according to Redfin's data, data is like a gun. You can use it for good, you can use it for bad. I think here Redfin's using it for bad. So they actually break down each of the cities, how many are sold at a loss, what the average gain was, the median capital gain by percentage and dollar amount. So take a look at the worst was Las Vegas, 28% sold at a loss. Well, that sounds bad. But the average gain was $75,000. The average profit on a home sold by investors in Vegas was $75,000. The other worst city was Phoenix. There, 30% sold at a loss. Okay, so that's tough. I mean, that's a tough market. But look at that. The average, including the losses, this is when I say the average, that's not just those they made money on. This is including those they lost money on. Their average profit per house sold was over $65,000. That sounds like a pretty good profit to me on a $400,000 house. That's like a 15% net profit. I guess 19.1% net profit. So I think Redfin's trying to make home investors less competitive or less interested because their market is really to home buyers. But I don't even know what the thing is. I hate to even think about it. But what should you do? Well, as I always say, you focus on you. If it's a good time for you to sell a home, let's find the right strategy. There's some great strategies to avoid taxes, whether it be you want to avoid property tax changes if you're moving within the state, or capital gains taxes on that property you've had for a long period of time. There's some great strategies in place. But let's get together and get the best strategy for you. If it's a good time to buy, let's buy. Let's put a strategy together for you that makes sense. Don't worry about the market's telling you in this news, because for the most part, the data you're getting isn't going to be accurate. So if I can help you, let's call me, text me, email me. Let's get together and talk about the best strategy for you that will work in this market for your situation specifically. As always, make today your best day ever. Thanks so much.